I got home from work. I saw a notification on my phone, and I just couldn't believe it here. Okay, so I had to do my research and make sure I saw this right. You get here a top analyst from Oppenheimer. Here's his quote. We may be, quote, entering a new bull market is what he says. Are you kidding me? We have an analyst calling for a bull market. So I went ahead and read this article, obviously. We're in what we think in a near-term base amid what I think is becoming a longer-term bull market. Says Ari Wald, senior analyst at Oppenheimer. Are you kidding me? He's saying this is the start of a bull market again after we had ended a 10-year bull run with a crash. And now we're skyrocketing back up to where we were. I mean, come on now. We're talking about the Dow being at the 23,500 level, which obviously it's not where we were. The Dow was nearly 30,000 at one point, but we're talking about since the start of this. Well, we'll call since high points in February. The market's only down 20% in terms of the Dow. You kidding me? And all things considered, I think I'm perfectly okay with that result. I know a lot of people probably would think it's a little bit crazy. Should be down more, and I kind of understand it. I think we got hit way harder than we needed to. It goes perfectly without saying that I don't think a 40% downward move was justified by any means. I do think that was a complete overreaction. But if you think about it now, we're down 20%. In my eyes, I think that 20% downward movement is a lot more fair of a reaction to the market. I think it really is. There's a couple factors that I want to look at here. First, we'll finish reading this article. Then there's a couple factors I want to look at that help me determine what is going on in this market. Something interesting for you that you might not think about. So here is Mr. Oppenheimer. There's much debate over the last several weeks whether we've already seen the bottom of the markets, if there's more panic days ahead. Wald says investors should pay attention to tech and healthcare sectors in general as the base progresses. You're going to see our breadth improve, and actually some of the stocks are going to start moving higher. We're already seeing that in some of the high growth names within tech and healthcare. I think that's what you want to stick with, is what he added. So he's talking about tech and healthcare. Gosh. This obviously goes on quite a bit here from what he talks about. And I think I completely agree with him in the aspect of if you are picking good companies, I think you've got nothing to worry about because good companies are poised to be successful in this. There are some industries that will actually find success. You talk about a company like Netflix who's actually benefiting from this. They're growing more subscribers than ever. Now, the stock isn't going up because the valuation's not necessarily there, in my opinion. But if you think about what exactly that has to offer, it is growth. If you look at even a stock like Snapchat, investors are buying in because of how much the stock went down. Not only that, but because of how many users they're gaining because of lockdown. People on lockdown lead to, that's right, benefit for those. But I do understand short-term pain could certainly be an aspect. I'm not going to say there's definitely not a chance, and I called for another 15% downward move. But here we are. I don't know. We've gone through a week of earnings nearly, and they've all been normal-ish earnings. The only weird earnings have been bank earnings, and guess what? The market didn't even react to those. Next week, we have some very big tech names, and if those don't move the market next week, I don't think we're going to have that downward move that I thought. I really don't think we are. I still could see a stagnant market for the rest of the year, where we end somewhere around the 24 to 25,000 range in the Dow. Nothing much in terms of movement for a full year. I could see it being possible, but I also could see the fact that we could enter a bull run. I really could. I think investors are buying in heavier than ever, and there's reasons for that. There's reasons why I think that. Look at TD Ameritrade, who just reported earnings, okay? TD Ameritrade marks a record net new client assets. That's right. That means new investors are getting in and they're buying more than ever. People are buying the crap out of this market. They're buying the heck out of this market. Net new client assets, a 13% annualized gain. Holy crap. Really? Are you kidding me? 13% annualized gain? That's massive stuff there. People are buying the crap out of it. Inflows were robust as new and existing clients brought over new funds to capitalize on various trading opportunities when market concerns started to dominate the news cycle. People are buying the heck out of the market. Where else are they buying the heck out of the market? That's right. This is a major thing you need to look at. Insider trading. I've zoomed in on this one quite a bit, so you could take a look. Look at this chart here, and this is since 2004, right? This is going to compare the SPY, really the ETF tracking the S&P 500 versus the month insider buy to sell ratio. So the buys versus sells for insiders. How much are insiders buying? Obviously, the larger the green line you see, the more people are buying. So let's just take a look here, and you see obviously major issues in 2009 with the financial crisis over that period from 2008 to 2009. Guess what? Insiders were buying while their stocks were mega cheap, and you saw that it go down here. And you saw another dip here, 2011. Guess what? Investors were buying big. 2016, during the election, investors bought big. What else did we see? 2018 in December, there was a big dip. Investors bought big. And look at this massive green line over here on the right. In March, this S&P 500 went down massively, but insiders were buying like no freaking other. Nearly 2 times as many buys as sells. That's massive. Insiders are buying their companies like no other. If you look down here, look at all these companies. Everything you see is buys. Buys, buys, buys. Go to page 4 even. Buys, buys, buys. All the way through April even. Page 6. Buys, buys, buys. Dated April 8th. All these companies, insiders are, that's right. Do you see a sell here? I don't. Insiders are buying companies like no other. Look at this. Look at this. MGM even. Insiders are buying MGM. Look at this. All these insiders buying MGM. And guess what? This is a company that's going to be hit harder than most. But the insiders are still buying. Because, as I said, I think the market was oversold. I really do. I think this 20% downward look is a lot more fair of one because we also have some good things to do. If you look at the news right now, what do you see? We're talking about reopening. Reopening the economy. Now, it's not a 100% reopen. That's one thing to consider. So we're really going to have to move kind of sector by sector. So you might start with stuff like restaurants and then move onward to, hair salons, stuff like that all together. And then most likely the ones that probably won't still happen are going to be your areas of large gatherings. Those are going to be the companies that probably aren't quite opened quite yet, but probably by June they will be. So you're going to see originally in May there's going to be a vast majority of states completely opening up a majority of their stuff. So Oklahoma announces a plan to reopen just now. That's right. Georgia governor announces plans to reopen. Seattle mayor trying to reopen. And the thing is, obviously, this isn't really going to be. This is also, don't forget, Oregon. That's right. Oregon planning to reopen, as you see there. So there's a lot of states. You see Florida already reopened too, but there's a lot of states that are going to reopen. Now, this isn't at all a federal government issue. This is a state-by-state basis. So a lot of states will open back up. And it's just good for everything in general. It's good for the entire economy when things open up. We shut down the economy when I think it was a little... I understand the point of it, but it really damaged the economy, no doubt. So the quicker we get back up, the less of an impact we're going to see overall. We're at a point where companies are... Here's the negative here. Companies completely suspended guidance. More companies suspending guidance as the economy tanks. There's a lot of companies that just, while they're reporting earnings, and we see it during this earnings season, they're not giving guidance for the second quarter. because they have no clue how to judge it yet. They don't know when everything's opening back up to them. They don't know when things will be normal for them. So companies aren't going to be giving earnings or estimates for earnings for the next quarter, which makes plenty of sense. Naturally, I do believe since this quarter, I'm just being 100% honest. No one's earnings have been that bad. No one have been that bad at all, which slightly shocks me. You're talking about something where at least a month or two, at least a minimum of a month and a half, got impacted into their earnings. Let's be fair, a month, okay? Let's say it was only a month. They got shut down for at least 1/3 of their quarter. And you're seeing estimates for these earnings. Most companies have been getting very close to their earnings estimates. They haven't been getting hit that hard. And some of it's because lowered guidance, stuff like that. But now companies aren't giving guidance. So quarter two, as I mentioned, is going to be horrible. It's going to be bad for a lot of companies. But I think we could get to the point where we see the same impact, where we actually only have a month to a month and a half, or like half the quarter, be affected for most businesses. And if that's the case, they're just going to be a lot better than we thought. And we're talking about going into quarter three. I think most companies are going to be reporting normal earnings in quarter three. I mean, I think there are some long-term ramifications you need to think about with this, such as companies in manufacturing. What do we do to bring business to the United States versus production happening overseas? I think that's something that will happen. Especially, I think politics has a big role in this, and all things considered. So we'll see come November what that election holds. But depending on who gets elected, I think that'll have massive impact on the manufacturing sector. So you might see companies lowering guidance for that too. But I do think overall we will return to a normal state of company earnings in a normal economic state come quarter three for a majority of companies. Not all. There's going to be some companies that aren't going to see that boom of an impact, a boom of people going back in. But I already know for a fact, people want to go out. They want to go out. They want to go bowling. They want to go to restaurants. People want to go get their hair cut. People want to go shop for clothing. Trust me, I know people who really want to go shop for clothing. It may seem crazy, but people really do. And we got to get to the point where that's happening. So are we in the midst of a new bull run? I think it's possible to say that. I don't think he's that off in that, but I think it depends on what stocks you pick, okay? It entirely depends on what companies you're picking up. Are we going to be in a new bull run for companies like Carnival Cruise Resorts, cruise lines, resort companies? I don't necessarily think so. Maybe a couple months down the road, you might be at the start of a bull run, but I don't think you are for the time being for those companies. But there are other companies like big tech who are going to see a big benefit because of this, and those are going to be in a bull run. Let's be honest. I could see a dip coming next week, and if that dip doesn't happen next week, I don't see a dip happening in the near future, which seems crazy. All I see is a stagnant market, though. It's crazy to think about. This market's trading so irrationally. It's hard for me to actually give a pure speculation on it, but I would say it's going to be stagnant as opposed to having a major drop. So hope you enjoyed, and if you disagree, I understand for sure. It's just so hard to give a judgment right now.